All right, Maximus Analysis here for March 18th, 2016. And I wanted to start with the weekly charts to make sure that we are looking at the big picture here. And we can see that we're about 5 weeks off this low. Bear market trend line tapped. And again, it is not until it breaks down below that, we're not looking to say, again, officially in a bear market. Everybody wants to call a bear market, but again, until they break that level, I'm not seeing that at all. So again, we want to have key levels that we look at. First level that will give us some caution is, again, a violent break of 2000. So a violent break means that we're not tapping it and going up, but it's only like 30 something points, so that could happen quickly. So that would be like a first, okay, we'll see what's going on. We're going to have a slight pullback. We're up five weeks in a row. A break of 1965, okay, now we got something going on and we want to see how early in the week it happens. Again, if it happens on a Friday or a Wednesday, or if it happens on a Monday, you're like, whoa, because that would be a significant drop down to 1965, be like a 70-point move. So we want to make sure that that doesn't happen all in a single day. Again, that's the type of volatility we've been having, and we'll keep. I don't think that's going to happen per se, but again, I don't want to be surprised if it does. That's why I mentioned it on the videos. 1925, we get to, okay, we're going to see we have a pivot, and I drew these arrows in just to make sure we're not losing focus, that we're going to have some type of pullback. We want to see if it's going to break last week's low, which is at 1965, and where's it going to put us? Because again, we do have clear support here, but now we would run into the third lower high right here. So we just kind of really want to make sure that we're looking at the big picture here. But on the daily time frame, things look good. Again, a little long in the tooth in regards to the way it is, in regards to the rally, from these February lows. But I want to make sure that we're looking at intraday time frames. Now, when I say intraday time frames, I don't want people to start thinking, oh God, I got to trade a 5-minute or a 15-minute. Intraday time frames for a swing trader might be a 1 hour, a 2 hour, a 4 hour. It just will give you a little bit less risk, that you won't have to put your stop down below these pivots on the daily time frame, but give you an opportunity to partake in the uptrend as it continues. So, and again, it would also give you an opportunity to get short and not risk a whole days of, it's just a different style of trading, but I at least want to put that out there, that again, when I say intraday time frames, it doesn't mean that you all of a sudden have to stare at your computer. You can look at a 4 hour, or you can look at a 2 hour, and that could give you a little bit more, some more opportunities to get long versus, okay, now I have to wait for a significant pullback versus to get in. Let's look at the NQ. And NQ, we want to, if there is a pullback, we want to hold this 4200 level. We want to hold this pivot because we don't want to get back below these lows and above these highs. We don't want to get below these highs that I'm pointing to right here, in a significant manner, which would bring it back to this 4200 level. And that would break this pivot as well, and we definitely don't want to break this 4100 pivot. So again, the target that we had for the upside, if you watch the videos, again, everything's timestamped, was 44.14. We got to 44, basically 44.13. So I'm not going to be a stickler for a half a point on the ES. You can see that the bodies of the candles are starting to really get small, coming up to the 200-day moving average. So hell of a run. You just don't want to be late to this party. And again, look for the lower time frame to get yourself in if you still want to partake in that. YM, continuing to move very, very well. Again, we want to hold this 16,800 level on a pullback, because you can see that besides indecision day that it had, which was very violent at the 200-day moving average for all the indexes, it has continued to look up. So we just want to look at it and understand we're getting into some type of resistance, and we want to hold the 17,000 and the 16,800 level. Going towards looking at, let me go to the right contract. It is now time to look at the K contract. I actually posted that out on Twitter. And let's look at the weekly for crude. So for crude, I just want to show you something, that we are now testing some previous lows. And if you just draw something, very simple, thing like this to draw this level right here and say, okay, we tapped this low from this candle, and we want to see if they're going to hold again this 37.50 level. And you could see on the daily, and this is how you use multiple time frames to say, okay, actually it's hit twice and rolled that area. So it hit once, okay, broke through, and it hit twice. Now we want them to hold in the middle of this. Basically, this was setting up to be some type of small bull flag. We don't want them to come back in this $39 or $38 level again. It's just will make it almost like a false breakout, and we really would have to watch the action. So let's look at a couple of names. We will start with Amazon. And Amazon, we want them to break. We want them to break above 588. We want them to hold 541. Going to the daily time frame, to the weekly time frame, you could kind of see that that was the resistance that we put here based on this weekly candle. So they got up to it, and this would be, it would definitely be something that would be considered a head and shoulders pattern to, a lot of traditional chartists. So we want them to hold at 551. Going to Facebook. Facebook, it's something that we've seen grind up all the way up to here to this. We want it grinded all the way up from 110.88, and we want them to hold 105. But here's the thing that we want to make sure that we don't lose sight of is that it's taken a lot of time, but they're continuing to move higher. So again, we don't want them to break. I would say 110.88 would be the, yes, 110.88 immediately. Is that right? Yeah. So, and then we don't want them to we want them to definitely hold the 105 area. Okay, that will put them back over here. We'll get right back in the middle of the chop, and we haven't cleared new highs. Just really sloppy pattern. We've talked about the daily for Facebook for weeks. It just was a really hard grind up, pull back, and it's not clearing this level that much. So let's kind of see what we have going on. Let's look at Google. And Google is a funny chart as well, kind of that sloppy type of movement as well, just kind of really grinding sideways. But what I wanted to show you guys was on the weekly time frame. Again, to be careful is that let's peep into how the weekly is set up. Okay, so this, people might say this is earnings, but when you look back at the daily chart, this was not a gap. This wasn't like Priceline where you had that gap up or gap down and give you such a huge bar, which might be something similar to this bar. This might be caused by a huge gap up. This was not. So for this 1 week, okay, and they have not cleared the highs, we have 6 weeks of action that has barely gotten to basically the middle of it, okay, and this was not a gap. So be cautious. We want to see if they hold, again, this 737, 736 area, definitely the 720 area. If they get some type of pullback, the volume is continuing to be subpar. Again, it has subpar as well here. So just be careful. And again, you could use the intraday time frame to get into this trade, but just remember that, okay, you could see this was not a gap. This is the earnings pop, and it just flushed all the way down. They've not gotten anywhere close to where they need to be in the amount of time it took. So 1 week down, 6 weeks grinding sideways. So just be careful with Google longs. Last but not least, we will talk about Tesla. And Tesla has continued to move in a major way above this previous resistance. We had this trend line down here, and they're up above it. So again, what we do want them to do is to continue. They're up, 5 weeks in a row. Major move from the lows. I mean, you're talking about from basically almost 180 to 100 points up, dollars up, which is just huge. Got back above this previous resistance point or support that again could have been resistance, and it blew back up. So we want that level to become support again. It's bounced off it, but we want, if they scream back into it, for them to hold this 200 to 190 area, this $10 band that we've created. We want them to hold that. Okay, immediate level for intraday, small time frames would be, we want them to hold that 218 and definitely that 210 area. So again, continuing this rally, but again, if you're going to be going long, I suggest going with the intraday time frames to ensure that you're not chasing, because they'll give you a smaller, again, with smaller stops, you get smaller gains, but that's just a part of the of the game. You can hold as long as you want the runners, but at least it gives you your initial stop would be a lot less than if your daily time frame. But just looking at this, let's go to Tesla's daily quickly, and you can see how much it has moved in this time frame. So grinded sideways, broke, and then came right back up to basically almost fill this gap and get to the 200-day moving average. So let's see how much more juice they got in the tank, and when they do pull back, will they hold these significant levels of being this 210 area and initially this 218 area, which is right back here. Have a great week, and we'll see. Have a great weekend, excuse me, and we'll tackle them again on Monday. Take care.